Так, вітаю ще раз. Ми продовжуємо нашу подію антикрихкість України роки 22-го року. Ми проводимо за підтримки Фонду відродження та Посольства Швеції в Україні за медіа підтримки економічної правди. Зараз у нас панель фінансовий сектор, який впав, і, власне, сектор у нас такий зразковий в антикрихкості. Насамперед ми тут говоримо про банківський сектор. Я думаю, що, напевно, скоріше всі очікували на те, що фінансовий сектор в подібній ситуації впаде, а він дійсно не впав. І сьогодні ми будемо говорити про те, чому це вдалося на самому початку, чому в інших секторах виникли набагато більше проблем. От, власне, ми зараз обговорювали міжнародну підтримку, вона виявилася потрібною в бюджету, а ми далі будемо обговорювати, власне, бюджетні проблеми, яких є багато. Ми будемо говорити про те, як ситуація розвиватиметься далі, про ті виклики, які в нас є зараз з критичною інфраструктурою, яка потрібна для банківського сектору, як іншого елементу критичної інфраструктури країни, про те, що може принести Україні сценарій затяжної війни, власне, в банківському секторі. А план у нас такий. Зараз мій колега, наш економіст Максим Самоилuk зробить коротку презентацію, власне, про те, що відбувалося в фінансовому секторі, а потім Pervin, як правильно наголос, Pervin Dadashova, яка є директоркою Департаменту фінансової стабільності Національного банку, розкаже про те, як, власне, це все виглядає з боку НБУ, що було зроблено і як вдалося втриматися на початку, які є виклики на майбутнє. А потім, власне, два провідних банкіри, представники українських банків, Sulzhyk, який є членом наглядової ради PrivatBanku і так само наглядової ради Центру економічної стратегії, за що ми Роману дуже вдячні. І, звісно, Oleksandr Pysaruk, один з банкірів з найкращою репутацією в Україні, який є головою правління Raiffeisen банку України. І, власне, потім з такою критикою, як зараз люблять на Заході казати, critical approach на все те, що буде як офіційна позиція банків і офіційна позиція Національного банку.
I will ask our colleague Eugene Dubogryz, who once has been working in the National Bank as well, who is now the independent expert on banking sector and is working with our colleagues think tank Case Ukraine. But before that, Maksym, please. Thank you, Hlib, and I'm really welcome to all of our participants of the discussion. In February, before the invasion, we could have here two important notice. Please keep your tank fueled and in your cars, and please have the cash savings because the banking might not work. Both of advice are very important, but if we had a deficiency of fuel, then we didn't have the deficiency with banks and with financial systems overall. And we had a quite calmer situations with bank, fortunately. And today we're about to discuss, we'll try to discuss the issues of the financial sector. We will try to figure out what was happening in the financial sector throughout this 9 months, what were the factors of the resilience of this financial sector, and we'll try to take a look into the future. So let us start with our monetary policies. From the very beginning of the war, Ukraine has faced the need to finance our expenses that grown a lot, and first of all we're talking about the military expenses, and the National Bank has helped a lot. At this moment they didn't follow the principles of the monetary financial support to the budget, and this mission was really important, especially during the springtime. And it was important during the beginning, in springtime and the beginning of summer, when we didn't have sustainable international foreign assistance, and we didn't have enough of it. The fact that Ukraine has the opportunity to finance our expenses with the mission was one of the important factors for the resilience. And the hryvnia has turned out from the currency and one of the attributes of the state, it turned out to become the important weapon that helped us to force the victory. From the very first day of the full-scale invasion, where the National Bank has stabilized the currency rate on the level of 25 hryvnias per dollar, we had the limitations on the currency outtake. This kind of quick solution decisions have helped us to stop the panics and to stop the banking outcome. Then in time, there was a difference between the official rate and the normal rate has grown, and the NBU has increased the course rate. Right now, the gap between the market rate and the official rate is still being kept, and this is why the National Bank is intervening the foreign currency market as well. The banking system showed its resilience from the very beginning and from the first months of the war. Most of the banks are working. They have high liquidity, for example, through the emission of the money by the National Bank. But the crediting is still suppressed. We've had the growth of the credit financial support at some point of time because of the credits that have been provided by the banks. That was because of the 579 loan giving program. The National Bank didn't increase our interest rate. It has only been done in June, when we had more clarity on the security situation. The Ministry of Finance also has changed that because they have changed the percent of interest for the military bond. Right now, this military bond has the income rate of 18.5%, but the level of the interest for the deposits is only for 12.5%, and under the conditions of the deprived interest providing, the banks do not have a great interest of increasing that interest rate for the deposits. The overall situation with deposits is better than the situation with the credit lines, even though there is quite a low level of interest. The hryvnia deposit, they're showing the important growth, and especially due to the big salaries of the military man, because they have been paid to the banking cards as well. There is the new types of deposits by the Oshad Bank. They have also turned out to growth in the deposit sector. So the banking sector holds on, but the banks are basically working as a transactional mediators and intermediary. The crediting lines are limited, and most of the operations are not really active. We identified 4 main directions for the challenges of the sector that require our attention. First of all, there are the challenges of the monetary policies that the National Bank should figure out. There are the challenges and problems of the already ineffective loans that has grown since the beginning of the war, the need for the further restoration of the credit lines, and the blackouts that we have to deal with. The National Bank hopes to avoid the need for another correction of the currency rates that has been done this summer, so to get back to the floating and to the floating core rate, but no one can say when it's going to happen. And from how we see that, as long as we can keep the rates fixated, we should do that, because we're not going to have a lot of outcomes in letting the rate go, because first of all, our exports, due to the security and limitations, is not really going to be good, and the imports is going to increase, and basically the increase of costs of import is the increase of costs of the living products, which is going to also impact the poverty level. If we will take the dynamics that we have right now, that by the end of the year, the NPL is going to be up to 32-36% for all of the overall in the banking system. So right now we can only work separately discussing every case as the financial restructurizations with the debtors, so we have a need for systematic solution that might be applied. It will not give us the opportunity to turn all of the money that has been spent for this kind of credits, but will help us to take down the problems for the balancing. So that will help the bank to receive additional financial support further on. We need to have the stress test conducted, and here we might hope for the international support and assistance. Then we have the International Financial Organization that will give us the opportunity to provide the financial and technical support for the stress test, it is also a possibility that some of the banks, they will need additional influx of capital, and so the financial support from the international financial organizations might be more affordable than the money of the private capital. As for the loan provision is quite deprived right now, so the interest rate, maybe not for the first of all, but we see that there is a high military risks. This is the main challenge, and we know that we will not be able to decrease that before the war ends. And we will see that the overall interest rate is going to be decreasing to the second quarter of the year 2023, but to avoid the military risks when we have an aggressive country, neighboring country, that's going to be really hard. As of now, the loans provision is provided by the state support, but first of all, to cover all of the needs in the credit loan, in the loans, is not possible only with the state program, and we also have the credit, having all of the portfolio in the state hands is not really sustainable because the market mechanisms are not working properly in this case. If the state is managing basically all of the loan provision, or the increase of the loan provided in Ukraine, we need to insurance the military risks, and that has been already said many times before, and the government has been working on that. That also might be supported by our international partners as well. And just to end up, there is always the risk that has been in development for quite a long period of time already, but we can see it the most right now, the problems of the energy sector, the problem of the Russian tax, and the blackouts. So it is important for us to provide the good work of the Ukrainian banking systems in case of the blackouts, the full blackouts, or in case of the prolonged blackouts. Last week has shown us that the banks are quite ready for this kind of events developments, and they're ready to provide the good network for the banks that will give the opportunity to continue the services in case of blackouts, even before the banks have started to get their data centers and their servers either to cloud or abroad. And we know that the PrivatBank has done it, one of the first, and Raiffeisen bank had done it. So like the transaction processing should not be influenced by the blackouts, but in order to go through the next blackout in the best way, then the national banks together with the banks should work on increasing the number of the banking branches that will have the opportunity to continue the servicing in case of the prolonged blackouts or cutouts of electricity in order to mitigate the impact on economy. That's all from my side. Thank you. Yes, thank you, Maksym. Pervin, I would like to ask you to comment first, because Maksym has outlined the challenges that we can now see for the banking system. First of all, would you agree or would you disagree? Maybe we haven't seen something among the key challenges, but what do you see about what Maksym has said? So how do you see the dilemma when we have a lot of NLPs coming on, and there is the hundreds of millions in the certificates of the National Bank, and it doesn't really look like a good picture to have. And on the other hand, speaking on resilience overall and the energy risks, I think that Privat and Raiffeisen colleagues, they can also comment upon that. But still, just a question to you, because maybe I will disagree slightly with Maksym, because the National Bank cannot provide that, because you cannot give the generators, you can only give advice on that. But maybe you have some kind of general vision of how we can stop the general challenges in this situation. Yes, thank you very much for the question, and I think that I will start from the different position, and I will just start with what we have been doing and we're talking about for many times already, that the resilience of the banking sector of this year is actually the result of the very long time work of the banks, and together with the working of banks and regulators on improving our capacities of being resilient towards the different challenges coming up. There was the right thing that you've said, that from the very first day we've had the questions about the operational resilience, the opportunity to work, to work there, to have the payments provided and to go through transactions. We had the experience of 2014, 2015. Some banks had really risks and experience of the physical captivity of their branches, and the need to displace your branches, your work. So there has been a lot of experience that have been improved since then. So this is how it works. This is how it works. Unfortunately, it doesn't work the other way. You have to get prepared. You have to consider all of the information you have and all of the experience you have. And then you can say that the banking system can fight certain challenges. You haven't mentioned that, but I'm going to mention that as well. Except for the physical challenges, the banks had also had the cyber threats as well. And cyber threats were really significant. And so actually switching from the shelters where we have the servers and to using the cloud servers as well, that was very important. It's not just about the data security provision. It actually gives us the opportunity going to the cloud. It gives us the opportunity to decrease the cyber threats as well, because this is additional opportunities to support the security and safety and resilience of the main services that banks provide. So right now, during the military aggressions, there are some of the challenges that banks can cover better. So, this is how it's being done when you are learning while doing, you're learning when you're responding to the challenges that come up to you. Speaking about these challenges on the operational activities of the banks, we all do agree that, the temporary cutouts or the prolonged blackouts is definitely the big threat for us. But I would like to once again agree to what has been said before. The National Bank had addressed the banking institution to activate the work on resolving this problem. And the banks, they have really responded to that. And I do believe that that's a very good thing, that we were able to preserve the communication and the mutual support throughout this month. And it continued right now. The banks are working, the banks are addressing when it's needed. We had some commands from the National Bank and support when it's needed. So we are prepared. We're getting prepared for those challenges, and I do hope that we'll be able to overcome those challenges together. On the financial risks, on that, the one thing that I have to say about that time after time, some of the things that we are talking about when we're thinking about the operational challenges like the blackouts, they're also influencing all of the other stuff and all of the key risks for the banks, like the credit risks or others, because it's quite clear that the enterprises that are working in a harder way, it's much more expensive for them to work. So their challenges is more significant, and the levels of the NPL that we see right now, that's not the end. We understand that clearly. Our expectation is that the biggest part of the portfolio that is still working, that it still is being paid and compensated, because that's natural. We still have some of the flows from the businesses. Unfortunately, some banks will lose some part of this portfolio as well. So we evaluate that these losses were quite big throughout this year, and we understand that any kind of slowing down of the economy due to the blackout, they can cause additional wave of problems for sure. So our approach has been the same for quite a long period of time. We have given the flexibility to have the restructurization that is needed, but we really would like to understand what is going on for both for banks and for us. So we are responding to how the situation is being developed. And on the 25th of February, we have allowed some of the resolution. We have been monitoring the situation just for us to understand when is the best moment for returning some of the processes. The process is ongoing, and we had a lot of different procedures on the risks evaluation. And from our point of view, that's the right thing to do. And we have seen the impact of that. So that has been acceptable. We understand that, and we know what we should be working with for both us and the banks. The next question is of what should we do about that in the long-term perspective. We have already been working on the strategy for ourselves, and the strategy for us looks as follows. Right now, we're going through this year that is still going to be very stressful and shocking for all of us. But we do hope that the situation next year is going to be stabilizing more and more. And, having this forecast due to the energy terror. And our hope is that in the springtime, having the opportunities for the economy to work in a better or clearer rhythm. And we understand that the banks are going to be working further on because they're increasing their resilience in time. What we will have to do, we will have to analyze and understand what is the overall situation with the loan portfolio. We'll have to have this evaluation of the quality of the assets. When we're going to have the assets evaluated, we will be able to give some certain forecasts on the basic scenario for the banking indicators development. Based on these basic forecasts, we will have a clearer understanding. Do we have the needs for additional capitalizations, or is there an opportunity to own the capital on their own, or do they have enough capital overall? That would be the main checkpoint that we will have to divide, just to provide the resilience in the long-term perspective. Because unfortunately, any kind of resilience approach, if we will not going to be restoring it, it will be decreasing in time. But the banks have the opportunity to restore it. We have to control that, of course. And we have the opportunity to restore it with the operational efficiency that is still on the very high level due to the income, due to the additional income. So what we need next year, when the situation is going to be stabilized in a way, we will need to find a meeting between the regulators and the banks to have the common understanding how are we going to be developing and supporting the stability with the help of the capital influx. This is our expectations on the capital. Unfortunately, some of the things that are happening right now, especially during the war, unfortunately, they are developing, increasing, and changing some of the other risks as well. Some risks that we haven't considered before, or the risks were not that viable, they're not were seen before. For some banks, there is already the questions of managing their liquidity and having a harsher liquidity understanding than they had before. The sector is quite liquid, but we still need to balance this correlation between the current accounts, between the long-term or term money, and we are hoping that the banks are going to have a better input of money, and the best way how they can engage more money is actually to offer the quite high deposit interests. And so we have to develop our own funding structure, and you have to work with that because there's something that you will be working for the next years to come as well. And with stabilization, the loans should be restored, that's for sure. The one thing that I also wanted to add on the loans provision, for it being on this level, that's not because, for example, there were some of the decisions made by regulator, at least from our point of view. That's first of all, there is the problem of the lack of the big need and big demand, because all of the state programs that have been launched many years ago and have been restored throughout the war, they're still working. But even the interest in these programs that give a lot of good interest for the loan takers, they are limited because businesses are now in a really harsh conditions. And they're not about increasing their capacities. But this story is going to change. We're sure that the banks are going to be ready to provide the credits, but in order to provide the loans, we need to have the good structure in place. So it's not just, risk for us, but as a task for us as well. So what do we see in the upcoming perspective? There are some challenges that the banks will have to face as well. But just to end my speech, I would like to end with an optimistic point, not on behalf of the regulator, but on behalf of the banks. We've had a survey. And as a result of the survey, and we're asking about the systematic risks, we're going to have the next round of this survey that is going to be published very soon. But I just wanted to say that it's not just we evaluating the system evaluates itself. Throughout all of the challenges, throughout of all of the shocks, the system evaluates itself as risk resilient. And the evaluations of this resilience in the last 6 months, they have increased, they have improved themselves. And basically they are on the highest levels as of 2018. So basically the banks being in this really challenging environment, with the constant things appearing, with the constant new challenges coming up. So even being in the middle of it, the banks still feel that their resilience is still improving. And I do believe that it's a very good signal. That's a very good signal for all of us, and I do believe that it is a good start for all of us for the future. To keep on working, to keep on supporting the economy, because this is the main task for our system. Thank you, Pervin. Thank you for this evaluation. Roman and Oleksandr, if you do not mind, I would like to divide these two topics with you, whether you would agree with that or not. Because, Privat is basically the backbone for the operational servicing of Ukrainian economy. And when we've had this big blackouts of the last week, so basically the biggest amounts of the POS terminals were the POS terminals of the PrivatBank, because we have most of the PrivatBank POSs in Ukraine. And from what I know, Roman, you also have been working in the banking institutions, you're working with the technical issues there. So I would like to ask you, I guess, about the operational resilience. And I would ask Oleksandr, because Oleksandr is providing a lot of crediting programs, and because of Raiffeisen Bank is crediting the agricultural sector of Ukraine, that is very sensitive to the availability of the loan component, would like to ask you to get to this component. So, Oleksandr, I would like to ask you, Romana, please. Yes, thank you very much. That's a great place for me to be here, and I just wanted to start with our distinguished panels, because you mentioned on the cybersecurity threats. That's really hard for us, as a bank, because why we were so sustainable, why we were lucky. We were lucky because the whole 2020 year, 2021, we have spent for the cybersecurity. For ourselves, as the board, we've said that we're going to decrease the tempo of development of our bank. We didn't provide a lot of products, but we have focused on the cybersecurity. So when the attack for the private bank has started, so on the 10th of February, so that was something unprecedented. So for the first week, they have been only attacking the private bank, and they were not able to cause us the big problem, because all throughout year 2021, we have been working on our cybersecurity, and I do believe that this is something that we're not expecting to happen. So when the National Bank has allowed on the 8th of March, unfortunately it was done only on the 8th of March, but still, in 45 days, we have been already working in Europe. So, I just want to ask forgiveness for our clients. And you have seen a lot of costs, like the private bank are not working. They don't have their transactions working. We couldn't just say what we were doing, but we were working on the living system. And I think it was unprecedented. And I think in business schools, they're going to study how we did it. So it was a lot of support that we needed from our team as well. The other factor that I wanted to add up, more of a macroeconomical factor, there is this understanding as being the countercyclic. So for us as the board of the bank, before the war, the year 2021, year 2020, we have been very strict, let us say, with our risks. We didn't give the board the opportunity to buy lots of state bonds and to develop under our risk portfolio, because that was the right thing to do for the bank. So when the war has started, we have the cushion of balance. We have the cushion to buy the state bonds to help our clients. So we have been the control cycle. And when the war has started, we've let go both the board and the risks, and we just said, now you can do more for the state and for our clients, because our main task right now is to take our country and to take our clients to the end of the war, to our victory. So basically, if we will not have the victory, then the financial sector will not have the capacity to do that. So what would be the difference if we will have a better balance in the bank if our system will collapse? So right now, the main task for the banking sector is to help the state and to help our clients to go to the victory. I will just maybe step out to Oleksandr's territory a little bit, because, it's not just about the resilience of the banking system. It's not just resilience of the financial system. It's about the resilience of our businessmen and entrepreneurs. This is the resilience of the people who are holding our country on their shoulders. And that is the reason, they are the reasons why the banking system still works. So when we've had had with our CEO, with Gerhard, we have been opening the first branch in Kherson a couple of days after our forces have come back to Kherson. We have talked to the local heads of the businesses from Odessa, from Mykolaiv region, from Kherson region, and people have told us that, there's, yes, a lot of entrepreneurs, they have left their businesses as well. But we have a lot of people who have stayed and who have been throughout this 9 months and who have paid the salaries and who have given their money, who have been continuing the businesses. They're not going to leave their businesses at all. So yeah, we have some risks indicators like how much do they earn. But if the person has stayed and for this 9 months they have been coping with their businesses, that this is the best business indicator for the bank, for the national bank, for everyone. And we have to understand that. We have to know that, and we have to understand that. Like you have said, that we don't have people who would like to get the loans. Yes, but we have people who would like to apply for the loans, and this is still the work of our bank. So just for us to find the ways how we can manage these decisions for our risks committee and to give this money to the people, because this is the most important thing for the people who have stayed in Ukraine, who work in Ukraine, who support in their businesses. It's important for us to help them, and I do believe that this is about the resilience and the fragility of our system. It's not only about banks being ready, but it's about the entrepreneurs who would stay here and who would help our country to win. Yeah, so I'll pass the floor to Oleksandr with that. No, and not that fast. It's not that I want to take some time from Oleksandr, but there's one thing that I still wanted to ask you, because we have a different audience who's going to be watching us. So let us speak about, for the normal people. On the 23rd of November, and I have seen it objectively that some of the journalists have already been saying, okay, with your cashless stuff, the ATMs are not working, the POS terminals are not working, so now you see that you were way too clever with your cashless economy and stuff. So let us talk about that as well, because yes, the good thing about that, for everything to be working in the cloud, at least for the big banks, and so the servers that are not going to be turned off, or even that, I don't know if national banks controls that, but for what I have seen, that there were some of the moments when the client banks were not available for the smaller banks. I don't know if there were the systematic cases or not, but I've heard something like that. So, I can just say that not all of the maybe some people didn't transfer it to the cloud and something didn't work for some smaller banks. But if we will take a closer look then, so for the small businesses, for the average people, can we hope that the cash will always be available in the worst case scenario, but in the best case scenario, there's going to be more and more POS terminals that will be available, and what the PrivatBank do in this direction? Well, we've had this, well, that's the thing, like in most of the cities, we do have a couple of the branches that have generators that have they're going to be they have Starlinks that they're going to be working in any case. Like unfortunately, if we will turn down to the total blackouts, if you don't have water, if you don't have lights, because if you don't have water, so what we're going to be doing with that? So we are buying these generators if we can. And yes, of course, we don't have enough generators because as all of the people have, and I can't tell you because it's a very sensitive information, because I do not know how many POS terminals are going to be have turned off during the blackouts. Yes, we see this information, and yes, it's not really good for us as well. But again, there's some things that are not depend on us, because we had this in epicenter that worked, but the ATM or bankomat or PrivatBank does not work because there was the different capacity, because they didn't connected the ATM, because if they connected the ATM it would have worked as well. So this also depends on the businesses. And when I came there and they said well, we don't have electricity, so that's why the POS terminals are not working. They would have been working if they had connected that, because I don't know whether they did not work. So so basically that's about the businesses and their loyalty as well. So yes, that is a big problem, the work of the POS terminals, and we're trying to work on that as well. But I hope there will be no problems with the cash because some of the branches are going to be working. The businesses are going to help to get the cash as well. Even in the temporarily occupied Kherson, we've been working up till July. And so the people we've been talking to said, like, businesses, they've got the cash, and they were able to get a cash, but only in July the Russian military were forcing the people out. But I do believe that for us and the whole banking system, we are not to say ready for everything that is possible. But you understand it as well, that basically if we're talking about some really, really big challenges and some really big blackouts and the really big hits on the infrastructure, then everyone is going to feel that. But we have already shown that, the banking system is going to do everything that is in our capacity to hold on. Oleksandr? Yes, thank you very much for this invitation, for the very interesting panel. It's a pleasure for me to be here, and I wanted to support the previous speakers as well. And I wanted to start with Roman, because we have to understand that the banks, as well as energy companies and telecommunication companies, the internet providers, are the part of the critical infrastructure. And we don't have a magic wand and decision of how we can work it out. We are dependent. But as has already been said in the presentation as well, I am sure that to the biggest extent, we'll be able to cope with that. And in the case of the blackout that's going to last for a couple of days, that we are the key banking services that will be able to work. It doesn't mean that all of the terminals and all of the POS, all of the ATMs are going to be working, because it will depend on the power of whether it has generators and power. But at some point, at some places, that's going to be working. I think that the National Bank has provided a good idea of creating the unified network of the ATMs and POS that's not going to be different of whether bank it's been delivering the services. It's going to be a unified network that in the extreme conditions is going to be serving the critical infrastructure. That's important. And the banks going to the cloud, like the Privat has done, Raiffeisen has done. I think that other banks are also migrating to the cloud with their services. That really helps, because I do believe that the transaction flow, as has been said in the presentation, is going to be preserved. For example, the payments by the with the cards payments. So we are covering part of the risks, but we know that there's no magic actually in that. Getting back to the loans, I just wanted to also agree to what Pervin has said in her presentation, because basically we know that there is a slight decrease of growth of the loan portfolio during the war. And the biggest part of that is because of the lack of demand. So we just have to say it's not just about the demand, but it's actually the demand that can pay. The professional companies who have the credit history, who know how to do that, the level of risks for them is really high, just as high as for the banks is, which actually means that, first of all, they're going to optimize the usage of their working capital, and they're going to postpone all of the investment projects after the war. We had singular cases when we've continue with supporting the investment projects as Raiffeisen Bank, but those were the projects that have already started before and they needed to be ended. So the new projects, investment projects, have been postponed. That's one of the reasons. The second reason is that, the big banking is about the cyclical business. So, the risks of the businesses is impacting the capital and equity. So basically, we understand that in any crisis in any country, the banks are decreasing the level of loans. Sometimes they are even decreasing their portfolios, and I'm really happy to state that in Ukraine, in this really harsh crisis, that the GDP is going to decrease by 1/3, the banks have not decrease the loans portfolio. From what I understand, it's even grown even by 3%. For this kind of the crisis as we are currently going through, that's a very good result. There's a couple of reasons for that. First of all, the banks haven't stopped. The whole country has been working together, and the bank have understood that we're part of the critical infrastructure. We're supporting the economy. We're supporting the country in war of its independence, and the banks have been providing the loans as well. We have prioritized it for us, for. We have prioritized the critical sectors. We cannot provide the credits for everyone, and we know the reasons for that. But we have prioritized the sectors that are the most important, and we understand that the agricultural sector is 25% of our market share. Of course, we have prioritized it for us. We have a lot of clients in these sectors. We have helped them to finance the planting campaigns, and that was important for us. The medicines, the food products, and fuels. We have some big fuel companies, and when we had the fuel problems, then we were not able to sign out to them. So this prioritization of the loan portfolio in combination that's, with the long history with those clients, they can give really good results. And I just wanted to outline that unlike the previous Ukrainian crisis, because we had the crisis the global crisis in 2008 and our crisis from 2014-15, the payment adequacy and discipline of clients is much, much better, is much, much higher. For me, that is the indication of the unity and integrity of the country. The banks and the loan takers have been communicated with one another, and this is the experience of the previous crisis that we've had. We now have the payment discipline much better, and the banks are responding to clients in the better way. That is a two-way street process that impacts one another. The thing that we as a country have been very successful and have been resisting and have been fighting back against this military aggression from Russia and the clients. This is one of the ideas why the banks and the clients are working together. We're staying together. We're standing united. Oleksandr, there's also, it's obvious as well that except for this picture that we see, we also have the next planting campaign that has to be planned already. And we have talked to the agricultural producers as well in the framework of our podcast as well. We have also had some other events that we have conducted too. So we have seen quite a pessimistic picture on the availability of the loan resources as well, on the overall availability of the money resources for the next campaign. The same thing with the energy security, with the generators and the outages of the electricity. So in what way the banks that have the big networks that work, whether the banks are ready to come up for this new demand that is now appearing due to the changes of the external conditions. Like, for example, we have some of the, there are the people who are owning the apartment, for example, and we are asking for the loan to buy the generator, at least to support the heating system, but the people have never addressed for the credit or for the loan into the bank. So we have a situation of this gap between the need and the products and the loan products that the banks are offering. In your point of view, what would be the further development of these events? What would be the next tasks and challenges that the banks have due to this credit need? Well, it's quite clear, if you have this pessimistic thought, then I would just like to say that, out of my experience, and I have worked in different organizations and in different countries, and I have worked in the International Monetary Fund as well, I have never seen that in the DIPS crisis that the businesses would have the optimistic approach towards the loan availability. That never happens. That's never happens. So, the GDP is falling up to 33%, and, we don't have a lot of loans, but there are going to be some loans provided, and we're going to support the people as well. We are going to support our agricultural partners. We know them, they know us. We're not going to be supported, but doesn't mean that everyone will have the credit lines. All of the banks are going to have their own risks. So we need to support the loans that will be paid. If we're going to have high risks, then we're not going to provide the credits as well and loans as well. We have to understand that. Maybe the part of the pessimistic approach to that is that some clients will not be able to get the loan because they have no physical capacity to work on this loan, to repay this loan. And we just have to be honest with that a lot of banks during this war and during this conflict, they will prioritize the clients that have had the credit history with, that they know for a longer period of time, that have worked before. And if we even have this topics of generator and it's a new client without the history, that's really hard. I can't say that's impossible at all, but the banks are going to be evaluated case by case. Is it? Yes, I'm just sorry, I would just like to comment upon that and just like to add a question. So do we have enough of state support on the compensation of the interest, right, for the factual payment on this interest rates? Or maybe that's not maybe on the case of the National Bank, and you will see some support from the Ministry of the Finance to be provided. I just said that, and I once again will repeat that, and I would say that 579 program, the biggest program that is being used, 579, is a critically important tool for the support of the businesses. Yes, on the road, yes, on the ground, and that's critical. And I do believe that the Ministry of the Finance, they are really needed to be complemented because they continue to support that. No one is saying that they're doing something wrong. They're doing everything good. They have the demand to this program. It is lower than we could have expected, but it has been fully covered by the banks and by the Ministry of the Finance. Yes, yes, would you like to have a comment? Yes, just very briefly on the final questions about the state programs. I do believe that the situation here is just the same as for us, as for regulator and for the banks as well. We need to get our tools adapted to everything that's going on. In March, we've had the question of the planting campaign for the year 2022. Together, the Ministry of Finance and the Ministry of Agriculture, the other that responding for the economical development, we have designed some new tools into this program. It worked. We have given some loans. Right now, we have the next question of what should we do next, because we have the next campaign, the next planting campaign. We need some of the problems with preserving the harvest and to harvesting the light harvest as well. That means that some of the tools of the state programs are going to be reviewed, are going to be analyzed, on their effectiveness, and if there are needs, then we're going to make some amendments, and there might need some amendments because we see the economical situation is changing. This is a natural process, but we have to say that without the state support, the loan providing during the war would have been really strange event, and I even say would have been impossible. So yes, quite clear, we're all hoping that we are going to be, with the help of the banks, we're going to be able to work on that together with the ministry. We'll be able to redesign the program so that all of this access to the loan lines by the creditors who can pay for that would be preserved. Yes, you have 8 minutes to provide the independent evaluation to everything that you have heard and to everything that you have seen as the main challenges for the banking system right now. I think that I will even have it faster, because thank you very much for invitation. My independent evaluation would be like, I agree to everything that the speaker said. That we don't have anything to critique the banks for. We have to thank banks. We just have to say that thank you for being with us. Thank you for your infrastructure working, because so the people, they don't feel a lot of problems with that. The problems there are really minimal to everything that we've had. I remember the 25th of February, I'm talking to my partner from Germany, and he really wants to give me some money, and he said, my bank, and I'm not going to name this big bank, and doesn't want to do that. We said that in 3 days your system is going to be down, because we're not going to be transferring the money to Ukrainian banks, because we're going to lose the money. So there was a clear thoughts about our partners, current partner, that in a week the banking system of Ukraine will cease to be, but it's still there. It works. It keeps on working. It is actually winning. You can just take a look at the operational indicators of our activities. 1.5 times more operational income of the banks than we had. We had 70 billion. We'll have 107 billion this year. That's a separate story. Why? But this is a story. That's a market story. That is not some kind of an additional surplus. This is the market story, that the banking system works. So, speaking about the, our banks are just like a military forces of Ukraine. So right now they have wanted the battle for Kyiv. We have Kharkiv, Kherson, and other things right now. So one thing that I wanted to add in this case, like what next? What is next from my point of view? What's important? Why should we consider, except for what Pervin has already said, for the OKR, for the evaluations, for the reviewing of the approaches to the loan provision? The first ask right now, because like right now, take a look at the balance sheets. So we have 15, 16 currency of the balance sheets. That was the deposit certificates. We had 5-6% before. So this is the high liquidity equity. So this is like around 20% of the equities of the banks, the assets of the banks. And from the side of the money that the client can take at any point of time, and the banks is not going to provide any kind of obstacles, that before the war we've had around 55% of this kind of deposits. Right now this is 78% of all of the deposits. This is the demand-based deposits. What does that mean? Let us just recall. So what was the Nobel Prize was given for the bank's functions, and one of the key functions for the banks is the maturity transformation, the transformation of the money during the time. So, the banks that are given this on demand and transforming it into the long-term resources. Right now, the banks, unfortunately, do not have this function as of now. Yes, we are at the war and stuff, but I just wanted to say that this is the problem that doesn't have the one single answer to that. I think that, no one here can say, we should do it like this and that, just like that. The banks and the national bank, they should collaborate together and they should work on this problem solution as well. And the second, that's a problem. Okay, that's not a problem. That's not a challenge. No, everything is good with our banking system, but the challenge is the trust of the banks towards the national bank. This is what I'm talking about when I'm saying about the lack of trust. You see that, National Bank has said that the key interest is going to be 25 on the next 6 quarters. What would the bank do if they trust the NBU fully? They take the deposits. You take the deposits for 12%, and you're having 23 for the deposit certificates. Even if 20%, you're going to earn something more. The banks are not doing that. For me, that might be an indicator that the banks at this stage, they're not fully integrated to this unified system together with the national bank, that there are still some of the ways how we can improve the collaboration and the trust between the systems. So this is one of the challenges for the system as well. But for the general customer, all of the things, that are something that is unseen, because we see that the banking system is working, and this is the big result for the banks and for the national bank overall. But can you just recall 2015? People didn't like to go to the banks. And when we were asking, what have you done to the national bank since that? Are you afraid to go to the banks? No. But in 2015, you were afraid to do that? Yes. So basically, yes, we have to thank the regulator, and we have to thank the banks that were able to use the banking system. And all of those lessons that we have learned are going to be studied in the textbooks of the future, and we will be able to provide the support for our international partners and just to teach them how to work in a crisis. Yes, thank you. I have one question to Pervin, and if someone would like to comment some of the issues that we have brought up, and maybe you have to add up to some of the ideas. We have 4 minutes more. If there will have some time left after my questions to Pervin, just to end up on the positive note, but just again evaluate the risks. So we think that Ukraine will win tomorrow. We have 100,000 Ukrainian military people going to be demobilized, and we have a strong leap to the consumption because the Black Day is over. How does the National Bank sees that scenario, speaking about the stability of the banking system, when people are going to spend the money that have been taken and saved even on those current accounts, as Ivan has said? Well, from the point of view of the economy, a lot of consumption is good because the consumption moves the economy. The question is still about the different risks connected to the overconsumption, but the overall economy that has to be the very good impact for the development. Speaking on the banking system, consumption is good if it's going to be passing through the system, and because the money are in the banking system, that's going to be really good because we're basically going to be using the banking services. from what we see that. And there's going to be the transactions. We're going to be restoring the interest to different banking products. First of all, from the side of the population that's going to be using the very same payment cards, for example, to conduct their purchases. And once again, there will be the stimuli for demand and the driver for demand. It is something going to be stimulating the businesses to be quite active in restoring their activities, to be more relevant in investing into the working capital in order to be bringing up their own capacities as well. So the end of the war for all of us, of course, is going to be our main idea and main hope for. So this is also going to be the most important engine for the further own development for the banks and for the economy. And the idea that the money on the current accounts and the current on the term accounts, so if this money are going to be directed to consumption, this is a good scenario. The drawback of the money in this kind of a good case scenario, we don't expect that because, you know, the drawback, the outtake of money, this is something that brings shocks. So the problem would be only for your colleagues who are responsible for the inflation. Yes. But yes, basically yes. Okay, thank you. So I don't see anyone who reaching out to the microphone. I think that we have been really effective in discussing those topics that we needed to discuss, the topics on the banks that have stopped. So Max, do you have any kind of genius new ideas that you wanted to voice out? No, I need to now process all of the information that I've got, and then maybe we'll have some. Okay, we will then finalize it in our notes. So thank you very much for everyone who participated in our discussion today and for everyone who followed our discussions online. And in a couple of minutes, we're going to switch to the next discussion. We're going to be discussing the budget side of our world. How can we balance the need to survive, the businesses for survive, the businesses who is now into the multiple burdens of fiscal pressures, you know, because we have taxes in both military and peaceful situation. And what are the challenges for the budgets when we're talking about financing and supporting the military forces of Ukraine and other financial expenses? Thank you very much. Be back in a couple of minutes. We will start briefly.